Hey traders, welcome back to the channel. Today we're diving deep into the current market trends for Nvidia, the S&P 500, and Apple. I've got a jam-packed video lined up for you, so make sure to watch till the end for my conviction buy of the week. Let's jump right in. Starting off with the S&P 500, we're seeing some interesting patterns on the daily chart, and even more interesting are a handful of indicators that are rather concerning. If Nvidia starts to roll over, the S&P 500 could get hit, especially hard. Currently, SPY is trading around the 543 mark. We have strong support on 539 and 536. On the upside, we have immediate resistance at 544. If we break above this level, we could see a push towards 545. Conversely, a break below 539 might lead us down to fill the open gap down to 537 and possibly see price get back into the consolidation range between 533 and 536. With an hourly high volume profile node at 530 and also the 50-day moving average at 520. Zooming into the hourly chart, I want to share with you that the price action in this time frame tells its own story. The green candles are all much more powerful than the red candles, telling us that call buyers and put sellers are in full control, with price finding buyers at the 20-period moving average. As long as on the hourly chart, the price candles are holding the 20-period moving average. On the upside, for those of you who have a swing trading period of 2 to 5 days like me, I want to take profits when price tests the 550 level for the first time, with my first target being 544 and the second target being 545.50. The market likes nice round numbers, so a round number will normally be my targets on both the upside and downside. For the upcoming week, I'll be looking at buying calls if we break above 544 with a target of 550. On the flip side, if SPY falls below 539, consider buying puts with a target of 525 to 532. The key event here, the star of the show and what could lead the market will be if SPY falls into the unfilled gap below 539.5. That would increase the odds of a move back near 538 to 537 or lower with the 50-period moving average price containment on the daily time frame at 520. Now let's talk about Nvidia. There's been a lot of buzz around this stock recently, especially with its volatile movements. Nvidia closed at 131.88 last Friday. The stock has been respecting the 5-day moving average, which is currently at 125.88. This dynamic support level has been a lucrative buying zone during pullbacks. Short-term support levels to watch are 128.32 and 127.16. On the upside, resistance is at 133. If Nvidia breaks above 133.12, the next target is 136.72. For the downside, if it falls below 131.42, we might see a test the confluence of the rising 30-minute 20-period moving average near 130.56. For the week ahead, the short interest in Nvidia is still moving higher, currently at $35.7 billion, with by far the largest short interest on Wall Street, even surpassing major companies like Microsoft and Apple. This high short interest indicates a significant number of shares have been sold short, betting on the stock price to decline. The bulls have lots of rocket fuel for a mother of all short squeezes in this name. I'll consider buying more calls if Nvidia holds above 132.85 and starts moving upwards. For bearish trades, look at buying puts if it breaks below 128.30, targeting 124.5. This past week, we took several extremely profitable Nvidia options trades and another one on Friday for an 85% gain. Also, we shared on Twitter for free to my followers a swing trade on Nvidia that is up just about 100% so far, and they don't expire until July, so lots of time left on those. Join us to find out where and when we close these. Lastly, let's take a look at Apple. Apple has shown strong price action with potential for more upside. Last week's video I shared with you that Apple was printing a double bottom pattern with a measured move significantly higher. Well, we got that neckline break this week, and those options were up over 500% at one point on Thursday. As I mentioned last week, that Apple's double bottom pattern is quite interesting. A close above 199.62 would confirm this pattern, with a measured move target around 228 to 229. Apple broke out and never looked back, rising from 193 to close at 212 last week after reaching as high as 220. Short-term support is at 208 and 204.5. Resistance levels are at 215 and 220. For bullish trades, consider buying calls if Apple breaks and closes above 215.62, targeting 220. For bearish trades, if it falls below 211, look at buying puts targeting 208. That wraps up our analysis for today. Remember, trading involves risks, and it is essential to have a solid plan in place. If you found this video helpful, smash that like button, subscribe for more insights, and hit the bell icon to stay updated with our latest content. Drop your thoughts and questions in the comments below. I love hearing from you all. Until next time, happy trading and stay profitable.